Good afternoon. It's Monday, May 20th, 2024. It's 5:40 p.m. on the East Coast. It's a holiday in some parts of the world, certain countries in Europe, and it's Victoria Day in Canada. Getting to this video a little later in the day, and I must warn you, I'm a little bit under the weather. I got like a cold sinus thing going on, so please excuse me. But my commitment to these weekly videos is undaunted, and I think that's an important um, concept in life is to commit to things and do them even when maybe you're not feeling like it or maybe you're not at your best, and just accept yourself as you are and do your best and just keep chopping wood and carrying water day after day. That's all life is. There's no mountain to climb atop of and then it's all done and you raise a trophy and it's over. No, you just keep chopping wood, carrying water until your last breath. This is Robson at CEO Technician on X, at Goldfinger on CEO.ca, Goldfinger Capital on YouTube and Substack, and welcome to the Metalsverse. Wow. Wow, wow, wow. 2430 gold futures, 510 copper futures, 3205 silver futures, $5 copper, $32 silver, $2,400 gold. Pinch me. I must be dreaming. Pinch me. Wow. I blogged this on Friday, and wow, look at those charts. This is an all-time closing high for copper. Weekly, daily, it's an all-time high. It's an all-time high in nominal terms. Now, if you inflation adjust the 2022 high, the 2011 high, numbers get higher, right? But nominal terms, it's a new high. And the copper is starting to make some headlines, guys. Jeff Curie, his interview all over the place in the last few days, posted multiple times. I shared it here on my Substack, and then I saw 10 other people share it. 50,000 views on X and multiple tweets. Word's getting around about copper. This is my interview with Craig Perry of Vizsla Copper. Good watch. It's 10 minutes, short, sweet, to the point. And you can see me reacting to Craig saying he sees $20 to $30 copper within the next few years. Few where I come from is three. So the clock is ticking, Craig. 2027. Um, and this is just crazy. The copper concentrate treatment charges fell negative. So smelters in China are paying to accept copper concentrate from miners. They're paying for the luxury of accepting those because the market is so tight for physical that they're incentivizing the producers to send it to them. Now, this is likely not to last. I mean, you can see historically it's usually $80 a ton positive, so you have to pay the smelter to take your concentrate. But this is a sign that there's some unusual things happening in the world today. I shared this chart on X of the GLD, assets under management of the GLD. So continues to decline. So the size of the GLD in total dollar amount is not keeping up with the gold price at all. In fact, quite the opposite. It's going the other direction. And we'll talk a little bit about why that might be, but this is a very bullish sign because look at previous gold bull markets. The GLD rose, it gathered more and more assets. It rose, it rose. So what's happening now is unlike any other bull market or bull run we've seen in the last 20 years, okay, in gold. And prior to 2004, there was no GLD, there was no ETF, so there's nothing to compare it to. But dare I say, it's different this time, and we have the data to prove it's different. It's a lot different, okay? Goldman out with a note that they think there's a chance of a July rate cut. Now, the market is kind of pricing it as a long shot, like maybe a 20% chance. I think it's still a long shot, but my confidence in September is going up a lot. Right now, the market kind of sees it as 50-50 or 60-40 in favor of a cut. I'm feeling like September is going to happen, but it would be a surprise if we got a rate cut sooner than September. But they're looking at a market-based core PCE that rose just 0.18% last month. So if you extrapolate that to an annual rate, Fed's at its target. Now we need subsequent months like May and June to confirm that. But if it does confirm for another couple of months, then Goldman might be right. We might be getting a cut. And you can see, I mean, this chart and the 0.18% core PCE reading is not consistent with the uptick in inflation that we've been hearing a lot about the last couple of months. I feel like nobody really knows what the hell inflation is at right now. I feel like it could be anywhere between 2 and 5%, and a lot of people are just guessing and using, different metrics. But this is what the Fed looks at, core PCE. This is what they look at. And this is not consistent with an inflation rebound and above trend inflation. It looks like it's returning to their target. So if this is confirmed, as I said, in May, which is the month we're in now, and then June next month, we may get that rate cut sooner than previously thought. But again, I don't try to forecast rate cuts. I don't make money or lose any money on Fed decisions. I try to That's out of my wheelhouse and really not core to any of my processes in financial markets. SocGen, very bullish gold note out over the weekend. And just some key points here is that central banks, you can see here Q1, basically they bought as much as they did in Q1 2023, and that was a record. So they're very close to a record pace of gold buying. So there's no sign of this central bank gold buying trend fading at all. 2022 was a big year, 2023 was a big year, and 2024 looks to be on track to be another big year. So it's hard to guess what's going to have them back off. Certainly, if the price gets really, really high, I would imagine they would back off. But so far, um, that doesn't appear to be the case. The price is not too high yet. And just frankly, I mean, I, trying to call a top on gold here is pretty fruitless and very difficult. But I look at this and I see a $50 Shanghai premium in place, so $50 per ounce. So if the price in the U.S., in Chicago, the COMEX or the NYMEX is 24.30, that means the Shanghai price is 24.80. So that when it's a premium like this, it is driving gold to China because money's going to go where it's treated best. And if gold is being valued at 24.80 an ounce in China, the highest value of any location in the world, it's going to attract gold to come to China to cash in on that higher price. And there's no, I mean, yeah, this is a long-term chart, so this could certainly vary in the near term, but this looks like a pretty strong trend that began in Q3 2023. The uptrend started there. Shanghai Gold was actually trading at a discount at that time, and now it's trading at a premium. So unless you show me how this is going to end, that Shanghai is no longer going to be at a premium, it's hard for me to get bearish on gold here. It's just very hard when the Chinese have such a voracious appetite and are willing to pay a 2% or more premium for it. Just looking at gold technicals, let's get rid of this. Get rid of this. Obviously, some people might try to jump the gun and say, "Oh, this is a double top." That's very premature because it's not a double top until we break back down substantially, probably back down to 2300 at least. Um, and it's normal for a market testing an all-time high level to see some profit taking at or near that level, some gyrations around that level. So 2448 was the previous high from April. 2450 is obviously a round number level. So seeing some profit taking and some volatility around there is to be expected. This is not a double top. Okay. And you're going to see a lot of top callers come out in the metals. A lot of guys who have their bread and butter the last decade is fading rallies or fading big sell-offs because it's worked. The metals have not been in a secular strong trend in recent years, right? And so they're going to keep using the playbook that's brought them here that has worked most of the time in the last decade. But the reality is, eventually, the market changes character. And when it changes character and goes into a strong trend, those guys are going to be wrong consistently. And if you listen to them, they're going to cost you money, right? So you need to really think for yourself and make up your own mind. Is this a bull market? Is this a trend? And how long are you willing to play the trend for? How long can you stand it? How long can you stand? Why is this giving me ruble futures? Oh, weird. How long can you stand profiting from an uptrend, right? And that's a whole nother thing. That's a lot about psychology and position sizing. But you know, simply put, like my trick is with the metals is buy physical, put it away. Makes it a lot harder to go get it and try to sell it. Just keep stacking. Just keep stacking. And the way I express a bullish view on metals and commodities is through individual stocks, right? Stock picking. And that's what most of these videos is about. So copper supply continues to fall. I mean, this is kind of hard to see, but this is the 0% line. So we are below 0% growth in copper mine production. So any new copper, like any growth in copper supply, is purely from recycling. It's purely from recycling copper in wires or what have you, stuff that's already been pulled out of the ground that was in use for some other purpose, and now it's recycled, right? Copper mine production is woefully inadequate, and the growth is just not there. It's just not there. So normally in a commodity market, when a price of a commodity goes up 30 or 40%, there's a supply response. There's a supply response. That's how a market rebalances. The price goes up and incentivizes new supply to come into the market and take advantage of capture that higher price. In copper, that's not really happening because copper miners are just simply unable to increase the production of the metal due to a multitude of factors. We've gone through this many times, and it's been discussed ad nauseum. A lot of it has to do with permitting. A lot of it has to do with capex overruns, huge budget overruns, how difficult it is to find new ore bodies that are economic, tough jurisdictions. Example, Panama just literally just shuts down one of the largest copper mines in the world. All of a sudden, it happened in a 3-month time period, right? And we could go on and on and on. And a lot of this consolidation with the number one mining company in the world trying to buy one of the other seniors, basically a $170 billion company trying to swallow up a $40 billion company, has to do with copper. They are trying to get more copper production into their asset portfolio. And China is clearly the driver of most metals. We talked about gold already. Copper, China's having a big influence in copper, and this amount of restocking that they've done just in the first 4 months of 2024 is virtually unprecedented. Now, normally the Chinese will be price sensitive, and at 510, you would expect them to sell some, take some profits on the metal they bought under $4 in January or February, right? Um, this is interesting because we need to see what plays out here. If that does not happen, if the Chinese continue to accumulate and stockpile copper, even with the much higher price now, it's a sign that they are trying to corner or take control of the supply chains, globally. And this is copper that they want to hold, and they have a use for it. They have a reason why they're buying all this copper, and they'll probably buy more, right? So let's see how this plays out. I mean, certainly you would expect some profit taking after such a big move in the last month or so, right? Um, let's see. Silver breakout is just a thing of beauty. I know a lot of people want to talk about silver. They want price targets. They want all kinds of technical analysis. I mean, look, I'm a technician and I could draw lots of pretty lines and shapes on the chart, but what's the point? This is a beautiful breakout volume confirming, accelerating volume profile, confirming the accelerating price action. I mean, it is literally everything you want to see in a long term chart pattern breakout. Silver has it. How high could it go? I don't know. I think near term it's got 35 tattooed on its forehead. I think 35 is a very realistic target, let's say the next month or two. Bigger picture, could it hit 40 later this year? It's possible. It's possible, but my crystal ball is foggy. It's tough to make these calls, okay? And really, uh, I have full confidence that silver will hit 40, whether it's this year or next year. That's a whole nother question. Um, so let's go to recent blog posts. Pinch me, I must be dreaming. So we talked about this one already. And I just want to mention that the daily sentiment index for silver reached 90. So normally when the daily sentiment index for a commodity goes above 90, or when it hits 90 or above, it's time to get a little cautious. That's a warning shot that sentiment is getting a little frothy. Gold and copper are still around 86, 87, I think, so not quite at that um, red light, warning level. But I want to just note that if silver trades sideways for a couple days, let's say it trades 3150 to 32 or something, the daily sentiment index could reset to 80 or even the high 70s. And yeah, the thing you want to watch out for is if it continues to go higher. So if silver, let's say silver goes to 3250 tomorrow or 33, and this thing gets up to 94, 95, that's when it's a problem. That's when we're going to have a sharp drop to sort of reset the market expectations. But I don't think we're there yet. Bull market wisdom from legend. So just, thinking about how many investors today on X, on co.ca, people I talk to regularly, especially the younger guys under 40, they haven't really felt what a bull market feels like, especially in junior mining. So I came up with some of my favorite quotes, and I think this is important to read through these and think about what these great market participants, speculators, the wisdom that they have imparted over time. And I really like this one. Far more money has been lost by investors preparing for corrections than has been lost in the corrections themselves. And I think that's so true. So every time, a market has a big move, a lot of guys would say, "Oh, it's due for a correction. It's overbought. It's due for a correction." That is not alpha thinking. That is not alpha thinking. Okay, I'm just going to tell you, yes, markets do have to pull back and pause from time to time, but it's not always on the time schedule that you think it is. And the correction can happen in a week or two, and 2 months later, it could be at a much higher level. So are you going to perfectly time every little squiggle on the chart, or are you just going to go along for the ride of the bigger picture trend, right? And I think most investors, most even traders today would do much better by just trying to sit tight and be right and hold on for the trend. And it's funny how a lot of people say, "Oh, it's overbought, it's due for a correction." Well, the most bullish thing the market can do is to go up. So It's good it's overbought. It's going up. Okay. Um, what's next? OIH trade and riding winter. So we've talked about OIH for a while now. You guys have sort of been through this with me for the last month or so. We got in over here. It looked great. 320 got smacked in the mouth almost immediately down to 308. And now we're in the clover. We're in green. Full disclosure, I took some profits today at 331 in OIH. So that was a nice little profit, about $11 a share. Now, somebody say, oh, it's a $300 stock. $11 per share is nothing. Well, 100 shares is $1,100. 200 shares is $2,200. It's better than a sharp stick in the eye. And the volatility of this ETF isn't that great, right? So a 10% move is a big move. So relative to the volatility of this ETF, $11 per share profit is pretty good. A lot of guys won't have the patience to do what I've done the last few weeks, which is just to hold this and sit in it and stick to my original plan. People just get impatient, and even especially when it's a profit, like they bought at 321, it's 325. Now they say, I'll just sell and take the profit, and I can use the money to trade something else that's got more volatility. Okay, but a winner is a winner, right? And the goal is to get in winning trades and try to hang on to them. Try to maximize your profits, right? So that's what you got to keep thinking to yourself. Like the goal is not excitement and trying to trade YOLO call options in GameStop and lose your entire and blow up your entire account. That's not the goal. I mean, unless that's what you want to do. Sounds pretty stupid to me. The goal is to profit, consistently profit over an extended period of time and compound your gains. One good trade at a time. So this is a good trade. Took some profits today, but still holding long, and looking for further move up to the 340s in the next week or two. I feel like this is actually great. I've had to take profits because I've been in it for so long, and I'm up over $10 a share. I got to take some off the table, but I feel like this has more upside here as we get into Memorial Day weekend in the U.S. June is a bullish month generally for the oil sector. There could be plenty more upside here. Um, and then just wrap up with junior mining commentary, which is what most people tune into these videos for. So yeah, riding a winner like FCX, core portfolio holding, great way to express a bullish view on copper and gold. Look at this chart, right? There's really no reason to overthink it. American Eagle Gold. So what I'm just going to say on this one, drilling is imminent, right? Probably in the next week or two. I would guess they commence drilling. I'm hosting an X Space Wednesday, 11 a.m. Eastern Time with Tony Moreau and Neil Prowse, the American Eagle team. This is another chart, like it's like a Freeport chart. Like don't overthink it. They just closed an $8.2 million financing, gives them I think almost 15 million in their treasury now. That's Canadian dollars, but that goes a long way at NAC. They can drill a lot of meters this year and even into next year if they want to. Um, in a position of great strength. Okay. Uh, Wednesday morning, 11 a.m. X Spaces. Tune in. Feel free to ask a question to Tony or Neil. Awale Resources. So they also just closed the financing. Also in a position of great strength with over 11 million in their treasury. And I'm not going to get into the whole whatever happened with the financing and the board shakeup and stuff. I see there's an interview up. Let me give it a like. I haven't watched it yet, but I'm going to watch this. This is Antonio at Resource Talks. I'm going to watch that later. And the focus has been on the drama, right? The board, the financing. The focus has not been on the drilling and the rocks and this amazing new discovery they have at Charger and BBM. So now I think the time is to get it's time to focus back on the rocks, the drill program. And I hope that we will see some news from the company in the next week or two to update us on the drill program And I look forward to speaking to Andrew Chubb as well in the next couple of weeks to talk more about the drill program and the rocks. Remember, like this is a company that drilled 32 meters of 45.7 grams per ton gold in a new discovery, and literally a few weeks later, everything was about everything else except for the discovery and the drill results. And at the end of the day, the drill results are what this is about, not all the drama. So hopefully that's behind us. Hercules Silver. So this was a great interview by Kai Hoffman speaking to Neil Adshed, who's now an advisor to the CD fund. Um, the CD fund is a big shareholder of Big. I think more than 3% of total shares outstanding, if I'm not mistaken. So this was a good watch. I did watch this. Not too in depth because it's kind of a on stage, shorter format, sort of interview. But he did shed some light on, what he thinks about Big.V. And we got a little buying action at the end of last week. Well, a little volume came in there. I did know I try not to focus too much on the OTC trading in the US, but today Canada was closed and the US was open, and the OTC volume was actually pretty heavy and big, and it closed up about 5%. So we'll see what Canada does tomorrow, but it seems like we've got a little buying pressure coming in here. And can it finally get out of this range it's been stuck in for so many weeks? I don't know. I'm optimistic, and again, I'm very long and very biased on Hercules Silver. And I wouldn't be surprised if we get a news release, maybe not this week, but the following week, because they've been drilling for a month now. Two of the rigs have been going for a month now there. So I wouldn't be surprised if we get some sort of update from the company. But again, my track record on guessing news releases and the timing of them is not great. So don't really listen to me. Um, Kodiak Copper. So this is another X space I'm doing Thursday with Chris Taylor. Chris Taylor is the chairman of Kodiak Copper. And look at the buying that came in here Wednesday, Thursday, and Friday in Kodiak Copper. So I wonder what some of this buying interest is. It could be um, the drill program is about to get started. You can read this news release from May 8th. They outlined some new targets, some AI generated targets. This one over here looks pretty good. It's pretty lit up. I'm going to ask Chris more about this and what they're seeing and some of the targets they plan to focus on this year. I'll talk to him Thursday at noon on X Spaces. Please tune in and ask him a question as well. Um, that should be a really good conversation. And then VR resources. So these are just the five I chose, five that I own, five that I have a lot of interest in. Um, all of them have a little bit of copper too. Some have a little more gold, some have a lot more copper, some even have a sprinkle of silver, like Hercules. VR resources is copper with some moly at New Boston. They've been drilling for a while, and it's kind of been radio silence from the company since April, since early April. I'm sensing that we could get an update from VR this week. I have no idea what the update will say. I don't even know if they're done with hole one right now, but it seems sensible that this would be a good time to update shareholders on the progress of the drill program and sort of whether they're on hole two, if they intend to drill a third hole or what have you. How far did hole one go? Just all the stuff that people are curious about. And you can see the volatility here. It had a big run in March into April, and then some profit taking in April as the drill program got underway. And that's sort of standard stuff. People buy on anticipation of the drill programs, sort of the sizzle, and then as it begins, now it's time for reality to hit. Like they're drilling, what are the results going to be? And sometimes people get a little fidgety and take some risk off the table. But I'm quite pleased it's consolidating above that financing price. They did a financing, recall at 15 cents in March. So it's consolidating above that. I would say that's not a bad sign. But again, I have no idea because the company has been so tight lipped hopefully we will get an update soon from VR Resources. I am still very much long on VR and optimistic that we're going to have some good results from New Boston, but it's junior mining. So what I think and what I hope for does not matter one bit. What matters is Mother Earth and where she put those metals. So that's it. Let's just keep it short and sweet today. I gave you a couple of videos worth tuning into. Antonio from Resource Talks, Kai Hoffman from SOAR Financially, quality content from some quality contributors to the junior mining sector. And I hope you have a powerful trading week. Until next time.